Station of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 24th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, and let's say I'm your pilot, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone had a terrific Thursday. I know I did. Let's make sure that you and I, we do everything we can to have a fabulous weekend, a fantastic Friday. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to toss at us, just like these markets. Market tosses something out for the bulls, something out for the bears. It's up to you and I to go on that safari hunt and identify, what actions we should be taking. Of course, it always depends upon what time frame it is that you're trading. So we'll take a look at multiple time frames, multiple commodities, currencies, equities, in fact, anything you'd like. All you have to do is actually pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can dial us at 727-445-1044. I'm grateful for your presence today, and I'm absolutely here to serve you. So feel free to call on in. It is Fabulous Friday. This is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures trading up 18 points, trading out at 17,999. NASDAQ futures, they're up big. They're up 0.7% this morning. They're trading out at 45.13. They're up 31 points. The S&P futures up 4. She's trading at 21.11. Russell 2000 up a couple points, trading at 12.69. King dollar back at 200 ticks this morning, trading out at 97.25. We've got some movement in the soft currency market. We've got some movement in the hard currency market as well. You've got gold back $7. That's trading at 11.87. Silver down a nickel at 15.77. Light sweet crude off 57 cents. That's trading at 57.20. But let's begin the day by taking a look at how Asia ended up last night. Let's do that quickly. Let's take a look at the Nikkei. The Nikkei down 167 points. What do we know about the Nikkei? The Nikkei is on its way to complete a couple of different A to B equals C depends. It's already done the 1-to-1. That's the pattern coming off of the October 17th low out there. Kind of interesting. I wonder if we do an ABC off of our October 17th low. Well, we'll take things one step at a time out here. So the Nikkei had completed the 1-to-1, pulled back a little bit last night. No big deal out there. Of course, it was in the overbought-ish type condition out there. It's on its way up to the 2008-09 level, and that is on your Japanese Nikkei. If we take a look at the Hang Seng, 233 points to the upside last night. It's still just kind of hanging around these highs, most recent highs, after doing a 1-to-1.618 A to B equals C to the upside. This wants to go ahead and target 28,821. She closed out at 28,061 last night. A quick peek at the Shanghai. The Shanghai off 22 points. Not any big deal out here. What we know about the Shanghai is that it made its way to the long-term 0.618 retracement level. Did it 2 nights ago. Formed a little doji candle. Actually, even though my candle is green, the leaves did fall off of the tree here. But you have to expect that you're going to get travelers that are going to get off of this level here, the 0.618 retracement, because it has been such a strong run. But as we speak right now, there's nothing here that suggests that this wants lower price. It just simply needs to work its overbought condition off, or should at least try to do that before it makes its way up to the 54.28 level. A quick peek across the globe, across the pond over in Europe. You've got the FTSE up 14 points. If we just switch this to a weekly chart, we're going to see we've got a second week in a row inside of the FTSE where prices traveled above its 2,000 level. How about that? Take a look at the composite, obviously, shortly, because that is dealing, excuse me, with its 2,000 level. And in the case of the FTSE, actually looks like we've got this the third week in a row for the FTSE to be up and over that 6950.60 area. That's a key area for us to watch. Anytime the FTSE drops below that, that says 6754. But if it stays above it, you know, it's like, I think it was a 3,000-point move or something like that. It's a big move, but we'll take things one step at a time, one day at a time. Let's leave it on the weekly chart. Let's go take a look at the DAX out here, up 39 points, 0.3% out here. Now in the case, whoa, Stevie doesn't like when either I accidentally went ahead and hit the wrong switch out there, or the system just shut down. And that makes it really difficult to do a show on technical trading and tell you what markets are doing when the system shuts down like that. So we have to go to plan B while plan A is rebooting itself. It doesn't take long, but so we have to go to plan B. Now, I didn't have a plan B, so that means I really have to improvise here. So what do we want to take a look at? Let's go take a look at the NASDAQ. Let's take a look at the NQ. Let's take a look at it on a daily basis out here. Smooth, huh? And if we take a look at it, and at this stage here, you know, we had this nice little hammer candle. Let me get my cursor out here. If we get this nice little hammer candle inside of the NASDAQ, you know, very oftentimes a bottoming formation. This is the daily chart, by the way, we're looking at. That occurred on April the 3rd. Now, there was also a hammer candle that formed out here on March the 26th. So what the NASDAQ was communicating to both you and I, this is after making a fifth wave down that occurred on April the 1st, April Fool's Day. And so we know that what the NASDAQ was doing, at least what buyers and sellers were communicating to you and I, right? And they speak to you and I through candlesticks, through Japanese candlestick. It's a language that you absolutely have to make a must. If you want to really be able to master the markets, if you want to be the one where you're being able to look at a chart and know what it's communicating and telling to you, then you got to make a must understanding Japanese candlesticks. Now, look, there's a lot of free material on the internet, and there's a lot of books out there. I've seen it all. I can't say I've seen it all. I've seen most of it. I go out there and take a look at it. I am amazed at how many people get it wrong out there. You know, free doesn't necessarily mean free. Free means it could cost you a fortune out there. So if you really want to learn this, look, I've got several classes that I've done, consolidate, you know, thousands of hours into like 3 or 6 out there, and it gives you exactly what it is you need to know. So if you're the type of person that wants to learn in a relative, if time is important to you, then you either send me an email, steve@tfnn.com, get in touch with the folks at TFNN.com. They can go ahead and set you up for that. But we had a couple different hammer candles out here telling us that the NASDAQ was forming a bottom, which it has done along these levels out here back in the late March, early April timeframe. Now, where are we at right now? You know, big moves yesterday. Now, NASDAQ moving higher. What was it? Amazon was out. Microsoft was out. Who else was out? A number of. In any event, all we need to know is that the NASDAQ is moving higher. It's only in what looks like now maybe it's a second wave to the upside. That's the only way you really can count this after making 5 to the downside. It's the only way Stevie can count it. You can count it any different way that you want. So this says this thing runs higher into next week out here. So we'll watch the NQ. Now, what we'll also take a look at, so that's one different tool that we can use. Looks like the system is back up and running. Let's go take a look at the other system. Looks like we're going to have to leave the DAX out of this conversation here for a few minutes. But if I take a look at this chart, hopefully you're watching this on TigerTV. Because if you are, I think you're seeing a thing of beauty out here. Well, actually, what we've got here is we've got 4 different daily charts for the different futures contracts. The upper left-hand corner is the Russell 2000. The upper right-hand corner is the Dow futures contract. The lower left is the S&P, and the lower right is the NASDAQ. Now, I want you to take a look at these charts out here. And if you're bearish, the market, please show me where that bearish pattern is. That doesn't mean that we cannot see the top tick at 9:16 a.m. That's always possible. But let's just look at patterns. Let's look at the message of the markets and what it's really communicating to you and I. Let's take a look at the bottom or the upper left-hand corner, the Russell 2000. It's been in a decided rising price channel. You know, we talk about the market since January, basically having done not too much out here. Well, if we take a look at the Russell 2000, what I can tell you is that that at least since the February timeframe here, it's been in a nice little rising price channel out here. It's always good when the lead dog, when I mean the lead dog, not the index that's going to go ahead and pull the markets up, but the index that likes to be out in front, that is doing all the hard work for the NASDAQ, is out there, so the NASDAQ can draft along. Well, we've seen a nice little rising price channel in the upper left-hand corner. Nothing bearish about this other than prices traveling right into its daily market profile. It's just right around this 1269, 1270 level. So look, if you're a person that does believe that you want to short the market, then now would be the time. Because unless price closes above that market profile, I'll go ahead and I'll give that one to you. But what you really need to see is you've got to see the bottom of that rising price channel get busted out. And that's not where we're at right now. If we take a look at the lower right, so let's go from upper left, let's go from the lead dog to the NASDAQ, which is really doing the drafting. Now, it looks like the drafting is getting ready to, maybe we're on the final laps out here. Hey, that's something to think about. But it looks like the NASDAQ, which has been doing the drafting behind the Russell 2000, just simply has busted out and now is the lead dog. Now, I'm going to go ahead and expand this up here. And you're going to see really since February the 11th, we're looking at the June contract here. You can see that nice little consolidation pattern. Now, that consolidation pattern is 200 points. When you break through a consolidation, which the NASDAQ did clearly yesterday by getting above 44.73, the exact swing point would have been March 2nd. That price was 44.76. That says the NASDAQ, remember, we just took a look at it, could very well easily only be in that second leg. If we take a look at those A to B equals CD, didn't I mention that one of the indices we looked at had used an October low? Let's not use the October low inside the NASDAQ. Let's actually go ahead and get the A to B equals CD tool on this chart. Otherwise, it's going to be difficult for me to actually draw that for you. Here we go. And if we take a look at the A to B equals CD pattern, the smaller one that would be in play here for the NASDAQ, we'll just simply come off of this low from April Fool's Day, April 1st. That's your A point. Your B point is April 13th. Your C point out here is April the 17th. We've already done a 1-to-1 A to B equals CD, but don't forget, A to B equals CD only completes 1-to-1. What percentage of the time? What percent? Yes, that's right, Johnny. 60% of the time out here. This wants to move up to 45.56 as its next move, but really, we just need to add 200 points to 44.73. 46.73 is really the number, unless, and look, I cannot control, nor can you, what the market is going to do next. But the only way that the NASDAQ over time doesn't make that 200-point move is it gets back below 44.73. If that happens, then we got to come back. We got to circle our horses. We got to circle the camp and say, what's the meaning of that move? Otherwise, NASDAQ on its way to 45.56. Can it lift the rest of the markets? This is Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were taking a look at two of the four futures contracts before we went on that last break. So we want to finish this off by taking a look at the other two, because the reality is I can find a little bit here for the sellers, the bears, just as I can for the bulls. So I'll just give it to you, the straight scoop. Now, back to the bullish side, the bullish case, or potentially the bear side, because I don't know how the day is going to end here, but nor do you. But if we do take a look at the ES Mini, it also, just like the NASDAQ, had been traveling in a consolidation. That consolidation from about 2033 to 2108. So it's like a 75-point move. You can add 75 points to the 2108. That gives you your measured move. When you break out of a consolidation, that is likely what the outcome is. And any close today above, and we won't call it 2108. I use that as the consolidation level. It's really going to be the swing point from February 25th out here. You asked me what that number is. Let me put the window up. It is 2109.75. You're 2112 as we speak right now. So any close above that. And as long as, now that doesn't mean that price can't come back and test this 2108-ish type area. That's that yellow line I've got going across my screen. And I'm using that as the upper portion of the boundary. So price can come back. And in fact, the most bullish side would be price would actually come, it closes above it today, comes back and tests it on Sunday, rejects it, and then moves higher. If price gets back inside the consolidation, then, as Lee Corso would say, not so fast. I mean, that would truly be its message. That's why for those that want to be there, the high-risk individual who wants to go ahead and try to sell the top tick, I'm saying, you know what, why would you actually even do that now? Wait for price to reject the consolidation high and get back inside that lower part of the range. And maybe you've got a shot then. But otherwise, the message is, as of 9:26 a.m., it's long and strong. And then finally, let's take a look at the Dow futures. The Dow futures have this nice little rising price channel. It's been really consolidating, sideways as well. But there's a nice little formed rising price channel that's been in place here. Now, the Dow has been a little bit weak. It's not anywhere near its March 2nd high out here. When I say not anywhere near, to give you, percentage-wise, it's not that far away. Price-wise, what it has to get up to is 18,188. You're at 18,047. It could do that in the blink of an eye. Don't know that that's what's going to happen. It first has to clear this 18,050 level. So if you're going to look for anything bearish inside the Dow, it's at 18,050 level. But still, it's got to bust through that little rising price channel. So that covers our markets, the 4 indices out here. If we take a look at something else that is providing us with signals as to what's going on inside the market, it is, which chart is it? It wasn't that chart. It's not that chart. Where did I put that chart? Son of a gun. I had that chart out earlier. Oh, when the system shut down, that's what it was. Oh, and it didn't even save the work that I had done. I bet you that's the case out there. Boy, it did not. I hate when that happens. It just means I have to do the work live here. We'll do the work live. If we take a look at this is not the chart, though. I wanted to show you a chart. That just simply wasn't it. It's this chart right here. Let's see. Okay, now we go take a look at it. Now let's take a look at this. This is a chart here where you've got the volatility index in the center. The yellow line is the 50-day moving average. The blue line that represents closes, okay? So it's always the close of the actual session out here. Bottom chart's the Euro-Japanese yen. Now, in the case of the Euro-Japanese yen, let me get a green line so that we can put a nice little green line. We can see here about the Euro-Japanese yen. See how this is rising here? Now, the Euro-Japanese yen has been, still is, as far as I'm concerned, as far as I know, still is the carry trade out here. It's the currency pair that is really the fuel. If you were the pilot and you were going through a checklist to understand bullish or bearish, is the plane ready to fly out here? One of the first things you look for in your love tank and your fuel tank is the Euro-Japanese yen. What direction, because you don't want to run into a headwind out here. This has got a nice little rising bottom. Another area that you would actually pay attention to, we'll go right here, is going to be the VIX index. Let me just move this in. You'd say, in order for the markets to really move higher, you'd like to see a VIX index moving lower out here. Well, guess what? We actually have that in place. Yesterday, making a lower low out there on a closing basis out here. So you've got that moving in the right direction. And now, if everything really is in place, we take a look at the S&P futures contract. Now, let's just go ahead and delete that. Let's just put this in here. And you can see, it's now on a rise. So everything is actually in sync here. As I say, don't know what's going to happen at 9:29 or 9:31 a.m. out here. But right now, everything is in sync, and everything is pointing to wanting to take off. Look, I can find some things to be very cautious about. Trust me, and some very significant things. Now, I shared those inside the newsletter this morning. If you'd like to gain access to that, it's pretty simple. It's like really simple. You come over to the homepage at TFNN.com, you sign up for it, you get it for 30 days, and you get access to my workshops, the 2 that I'm doing on May 7th and 14th, and they will be a workshop that will be unforgettable. There will be a set of tools there. It doesn't matter whether you're a technical trader or not. You don't have to be a trader at all. It's going to be a set of tools that you'll be able to use for life. It answers, folks, it answers everything you need to know about why you make the decisions you do. Hey, how about your kids? How about your coworkers? How about everybody else? 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading flat out at 18,059. S&P is up 4 at 2116. That NASDAQ Composite up 36 points this morning. She's trading out at 50,000. How about that? How about 5,093? Russell 2,000 up a half a point, trading at 1272. The DAX, we'll take a look at that because we didn't during that first breakout there. The DAX is up 42 points. FTSE is up 9. Gold is back 7 bucks. Silver's off 5 pennies. Light sweet crude is off 77 cents. Leading the charge to the upside, it is amazing. Amazon up $58 out there. You know, talk about coming back to a trend line and holding. Amazon most certainly did that. Came back to that long-term trend line, held, and as motored on higher. 448 bucks is the what it's trading at right now. Google's up 25 bucks. That's trading at 582. Google has a pattern, by the way, of the way that it trades after earnings. It has, you know, kind of like gold has that full moon initiation move. Google has a earnings initiation move. It's one of the few stocks out there. I've gone back and tested it. You should go back and test it yourself. Don't ever believe what I tell you. Not that I would tell you a lie. I'm not. But you just should not believe it. You should go do the work yourself. That way you'll have some type of conviction behind it. So go do the work. Go check out all the earnings release dates for Google and see how often they actually set the mark for an initiation move whichever direction that it trades in after earnings. It's really an amazing thing out there. It's like one of the easiest seasonal type trades, not even a seasonal because it's just a quarterly trade out there. In any event, you've got CEP, CPHD, CEP, that's, I don't know what that's up 10%. It's up $5 and change. Gigamon is up 17%, up $4. So you got a lot of movers. Microsoft is up 6% this morning. That's big. Maybe we'll get an opportunity to check in on that. Biogen, that's big to the downside. No, Biogen, let's just check this out. It had high volume high out there on the daily, I think maybe even on the weekly. Hasn't gotten up there, so it's kind of interesting here. Is this a blow off top inside of Biogen? How would you like to be one of the 10 million shareholders that bought in on that day on March the 20th? Somewhere between the price point of 456 and 480. That's what stops are. That's what stops are in place for right now. You're trading out at 402 and 714,000 shares. So what Biogen could easily be doing here, all it needs to do is trade into close inside 397. That's not that far away. That would be easy to do, and that would say then Biogen would be headed towards its prior breakout. And if this is a three-gap play, where it's actually headed to is all the way down to the original breakout back in December of 2014. But next stop, any close below today, 397. You're likely looking at 354 to 372 inside Biogen, BIIB out there. You've got Aerie Pharmaceuticals. I don't know if I pronounced that correctly. That's off $20 this morning. You've got Stericycle. That's down $8. You've got ResMed off 6. You've got Emerge Energy Service. That thing, I think, as I recall, looking at that, was looking pretty horrible. I wonder if this thing ever bounced off the bottom out here. Emerge, that's a pretty nasty-looking stock chart. Emerge Energy Resources, that thing's headed towards the most recent swing point low, 41.13. It's trading at $46 as we speak right now. So let's go check in on the DAX. Let's go see what the DAX is doing. 20 up, $26 as we speak right now. We have now we'll take a look at the A to B equals CD that actually completed inside the ES-mini, and we talked about that on the 30-minute chart. And we utilized really that was just a follow-through conversation that I had with Maria in New York on Wednesday, I believe it was, and she was looking at this pattern here, which is a potential of an A to B equals CD to the downside. Now, what the DAX would need to do in order for that to occur, it needs to close below 11,674.59. If it does that, what we want to do is we want to be watching this pattern here as it unfolds as for a buy point. We don't know whether that buy point would be the bottom of this rising price channel or just would simply be the 1-to-1, 1-to-1.272, 1-to-1.618. We just don't know. What we do know, my suspicion would be if it breaks the B point, you're more likely looking like a move to 11,168 than you are the 1-to-1 A to B equals CD. But that's we'll see how that plays out. Each day that goes on that it doesn't do it, my mind would be changed. But at this stage here, we don't have that pattern unfolding, which was different than the S&P futures contract, right? Yesterday we were taking a look at a 30-minute chart out here, and the reason that we were taking a look at yesterday being an A to B equals CD to the upside was because we'd already had the second 0.618 retracement. Where price had moved higher, pulled back to the 0.618 area. In this case here was much easier because we had some nice bullish signals. We had a hammer candle back here on April 22nd. That's what set up the actual Gartley buy pattern inside of the ES-mini. Now, remember that Gartley buy pattern, the ultimate outcome is that it turns into an A to B equals C to the upside. I don't think we actually got to that price projection. We used the smaller one. But let me give you the bigger one first out here. The bigger one says the larger one. Now, this is a 30-minute chart, so I mean, how much larger can it be? But the larger one says 2121. Hey, that's where the 2121 number came from or something. But anyway, 2121, maybe I did give you that number yesterday. That's the 1-to-1 target for that A to B equals C. You can see it was a 0.618 retracement into that hammer candle. And you see, as I delete this here, what also we saw inside of the ES-mini was this second A to B equals C. That's the one that we suggested would go ahead and complete yesterday. That was coming off the hammer low from about 6 in the morning on April 22nd. That's your A point, your B point at about 3 p.m. on April 22nd. Your C point there about 4:30 in the morning on April 23rd. Nice little hammer candle. That gave us the 1-to-1 A to B equals CD. Price extended a tad beyond that. 2111 was the number. We actually saw a little bit of a spike high into the 3:30 a.m. Time frame, and that was up at the 2114 level. As we take a look at this 30-minute chart here for the ES-mini, We can see that the TAS profiles there in bullish formation. What do I mean by that? I mean that we've got the point of control, the area where price is most comfortable trading, where you've got the largest volume pattern, is really right next door to the support level at 2105. When you see that, that says that buyers are in control. Of course, that says that what you're likely to see is price rise up to the top of that box, and that's what really took place between 9 and 9:30 as price got up to a high of 2113. The top of the box, 2113 and a quarter. At this stage, price just trading inside of the box. You break below 2105, 45, and then we have to take a look at different messages inside of the market. Right now, it's trading out at 2108. That's what's going on the 30-minute chart. But it's really the mere fact that we saw multiple 0.618 retracements versus just the first one, which is what we really have inside of the DAX out there, that gave us more of an indication that we're looking at the stair-step A to B equals CD pattern to the upside. Now, we could very easily be looking at that as well right now, because when we take a look at retracements just on this C to D leg here for the ES Mini, if we go from that hammer low to that high that came in between 2:30 and 3 last night, we've only seen as a 0.382 retracement, 2104. Now, how that helps you and I is if we do see a close below 2105.50 inside the ES Mini, your target becomes 2,097.81, and Stevie would say really 2,099 and a quarter. That really becomes the line of demarcation today. So, I won't be with you at 3:30 to 4, but I would be looking for the ES Mini, and is it trading above 2,099 and a quarter? If it is, then the market is still inside that bullish move to the upside, along with the NQ and so forth. So that's the short term. Now let's go take a look at some things that are actually also moving in the market out here. Everything is moving. Everything is grooving. We took a look at Biogen. Let's go take a look at Amazon. So in the case of Amazon, I mentioned something coming back to a price trend out there, a trend line. Let's put this on the monthly chart. On the monthly chart here, just a beautiful, oh, there it is. Okay, great. It's still in the system out here. You got to love that. Now, if you take a look at, this is a trend line that we're using out here. So trend lines, channel lines, they all have their specific use. If we take a look at the trend line here for Amazon, you go all the way back to 2008, down at the low of 34.68, and you use that in essence as your touch point. What's interesting here is the pullback in price that really began that trend line that you could use was in July of 2010. That's at the low of 105.80. And then what happens? Price moves higher, comes back and tests the trend line, does it a couple of different times, maybe for about for almost this is a monthly chart, so for almost a quarter out here, because low on December 1st in 2011, as well as the low on March 1st of 2012. You can see how that trend line held. And what's interesting is back in October 2014, during the Ebola scare, price came back, tested it, moved a bit higher, came back and tested it both in December and January of 2015, and price has taken off to the upside. Now, with regard to A to B equals CD patterns, that could easily be in play here. We're not at the end of the month here, but 81 million shares was the month of January in 2014, and so far you've done 55 million shares out here. So you could get a confirmed A to B equals CD to the upside inside of Amazon, and if we did that, you might be asking, well, what would I use as my A point out here? In the case of Amazon, I would come all the way back down here to the month of December 2011. That would be my A point. Now, it can make the A to B equals CD even without a confirmation. You like to have a volume confirmation, but it's not a requirement. It's that it just simply isn't a requirement. But if you did get the volume here this month, it would say 526.34. Would actually say 591.92. More likely would be the move versus the 526 level. And that's amazing Amazon. That's on a longer term chart. So that's a monthly chart that we are looking at. The daily chart, you've got a fairly large gap out here. Let me pull this back. Is there a third gap out here? Nah. Not anything that I see out here at all. So just simply it's a second gap. Will it get filled? Yeah, maybe eventually. But, hey, this gap out here, this sign of strength on January 30th, that certainly hasn't been filled, and price continued to motor on. So don't bet your sweet bippy that that's exactly where did I know that came from Rowan and Martin's laughing, but what is a sweet bippy out there? Somebody ought to phone in and tell me what a sweet bippy is. So we've got the Dow's off 48 points. S&P is up 19 cents right now. Composites up 27. Let's go check in on the summation index for our three guys out here, the New York Stock Exchange, the Composite, and the Dow. And it's still all in bullish territory. Always hard to bet against the trend out here, and that's what you're doing right now. The trend, if we use the summation index for all three of these indices, is pointed higher. If it gets below the zero line, then that would make the sphincter muscle of the bulls really tighten up. But we got a lot of time left in today's trading session, so and I won't know the results of that, quite frankly, until 4 p.m. If we go take a look at some of these other stocks here moving, let's take a look at Google, all right? So let's look at Google. It's up about $19 right now. Let's see what it is doing. This is the daily chart that we're looking at inside of Google. Just remind me to come back and test out that theory. Now, I don't need to really be reminded. Let's look at the last earnings report here inside of Google. That took place on the trading day of January 29th and January 30th. You can see it had that initiation move, and what did Google do? Just simply continued to move higher into the March 5th timeframe. Now, when I say that it sets up these patterns where the direction that it trades in after earnings, that trend typically continues, what that also means is that you've got to be able to have different tools that you would use to identify where price is going to head to. One of those tools, would be your A to B equals CD pattern. And in this case here, let's go take a look at what Google did. Looks like a little hammer candle also by way back here at January 12th. So we'll use that as our A point. Our B point out here, we'll take on the January 23rd level, the C point down here right after earnings January 29th. This thing makes more than a one. Now you can see as it's coming into the 1-to-1 A to B equals CD here, wide ranging bar. This is back on February 26th. Continues to motor higher, gets above the 1-to-1.272 level, and then the first time that you see any bears show up for the party out here inside Google, that happened to be on March the 6th out there, and that told us that it was time to shut down that party. Google also had gotten into that overbought condition, so it said it really needed to work that off, and it really did so by moving sideways out here. So, at this stage of the game, let's also take a look at any other trading issues or patterns issues that Google has. Right now it's dealing with a swing point here from March the 5th, but that swing's only got 1.7 million shares, 1.8, and Google has done 1.2 as we speak today. So it's going to get up there and at least test that 583.20 level. But what this really says to us is that, in fact, Google is trying to set up a larger A to B equals CD pattern. So if, in fact, Google is able to, let me clean this chart up just a tad for you. We'll get rid of the TAS profiles for the moment. Just to clean up that chart. And as we take a look at Google, now what we would do is we would still use the same A point, right? We'd use the same hammer candle, the January 12th low out there as your A point, and your B point inside of Google now becomes, it looks like it's the high. Let's confirm, 583.20 and 581. Yeah, so it's going to be the high from March the 5th, and your C point down here, your retracement into April 17th. We'll see less than a 0.618 A to B equals CD to the upside out here, and 583.20. We know it's being tackled today with volume. I don't know if it's going to close above it, but if it did close above 583.20 today, because it's got the volume, then you'd have a confirmed A to B equals CD that takes you up into the 622 area. That's inside of Google. So 583.20 is really the key level to be watching. If we go take a look at, what else we have moving up here. I'll have to look during the break, see if there's anything worth noting. Of course, everything is worth noting. The most important thing worth noting is how much we appreciate you here at TFNN. This is Fantastic Friday, mostly fantastic because you're here with us. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 13, S&P's up 2, Composites up 32, Russell's down a point out there, and of course, thanks to all of our co-pilots inside of the Tiger's Den that assisted me with where the You Bet Your Sweet Bippy, what the Bippy actually was, and if I said You Bet Your, you could fill in what the so-called Sweet Bippy is, although I can't exactly say that my is a Sweet Bippy, but nonetheless, I digress out there. Let's, of course, that was taken from David White. Let's go take a look at the ES Mini out here. Let's take a look at it on the 4 different time frames. Actually, let's look at the charts. Let's go back to these. Here's the daily charts here with regard to the futures contracts. We'll pay attention to that. We know we got resistance inside the Russell at 1270. Any clearance above that, all signs point to moving north. Inside the Dow, it's 18,050 that you got to be watching. Inside of the daily chart on the ES Mini, it's 2108. I'm sorry. Well, no. The inside the Inside the Dow, inside the Russell 2000, those levels were the TAS market profile highs. Inside the ES Mini, I'm looking for it to clear 2108 to break through the consolidation. And inside the NASDAQ, it's really breaking above 4473, which it had out there. But now if we go to the short-term time frames here inside the ES, just to give you a feel for the setup for the day and what you want to be watching for. The 30-minute, which we covered, you can see you've got in your TAS box, you've got your point of control very close to that support level out here. So that says 2105 is the key level. It says that the buyers are in control on a 30-minute basis. In a 60-minute basis, it's also set up with a bullish configuration, with 2106 being the bottom of support, 2112 being the resistance level. Close above that is bodes well for buyers. In the 30-minute chart, it's close above 2113. On the 120-minute chart out here, also set up with regard to a bullish configuration, with resistance being the 2114 level, support there being 2103. And on that 5-hour energy drink chart, that broke through a resistance line a while ago, and that has been all signs pointed north out there. So, folks, have a fantastic weekend. Stay tuned for the Nadex Bull Bear Binary Option Hour with our man Darryl White, and, of course, none other than the one, the only Thomas O'Brien. Have a great weekend. I look forward to seeing you Monday morning. Take care, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.